Alright, welcome guys. Welcome to another episode of my company health check series. So for those who have not watched my previous series, do check them out and remember to subscribe. Here I will share occasional updates of my portfolio companies I invested in and am still holding. I will analyze them using the bottom-up approach, usually during the quarterlies and all the way to the full year reports and beyond. So I believe that by journaling my research in video format, I hope I can make myself more informed of my past decisions, whether it's right or wrong, and also share my insights with everyone else here. Hopefully all of us can benefit in some way, especially to fellow value effective investors like myself, yeah? So I have been away overseas for some time and I happened to just get back from my trip, and today I will be sharing about my insights on Google third quarter 2023 earnings release. So this video is actually long overdue, but I believe that uh, the analysis that I've done, even though a little too late, can still give valuable insight into Google's future. So here you can see that Google's share price have already been up 48% year to date. I do not know if any of you guys have invested in Google earlier this year. For those of you who have, congratulations, right? So for those of you who have not, have we actually missed the boat on Google? Can we still buy at this point of time? So yes, okay, before we dive further, do remember, please help me share and like this video, and of course subscribe to my channel. Your support is greatly appreciated, right? Because of the effort I've spent doing up this presentation for you guys. All right, so let's move on. So first, let us take a look at Google's segmented revenue for Q3 2023. The largest share of revenue comes from Google Search alone, and that has increased to 59% from 57%. All other segments take on around 10 to 11% revenue share each. Most segments saw an improvement in revenue growth except Google Networks. So this led to an overall growth rate for the 9 months ended at 4.64% year on year. But however, quarter on quarter it was flat. My conservative estimate is that this year, overall revenues will increase by 5%, as I see continued healthy growth on its search business, and this trend should continue until the end of the year, as revenue from advertising should pick up during the holiday season. So for segmental operating income, I noted that there has been a outperformance in Google Cloud business, which had incurred a loss in the same period in 2022 and has now managed to turn a profit. This is a great achievement by Google itself. I however noted that there has been a steep 32% decline quarter on quarter though for the Google Cloud business, and this had spooked the market. So on the contrary though, I see that Google Cloud picking up steam if we had compared their performance to last year instead. So Google Services operating income continues to grow year on year of 21%, providing a healthy operating margin of 35%. This generated an overall year-on-year operating income growth of 19% and a negative 2% slight decline quarter on quarter on its overall operating income. But operating margins remain healthy at 24% this current quarter. So, however, I believe, right, that operating income may be set to decline next quarter, which is their final quarter, as the company attempts to incur higher costs on their hardware and on their latest Pixel phones, and also higher customer acquisition costs relating to YouTube. Higher operating costs relating to marketing to drive the expected higher sales during the holiday season will also eat into its final quarter operating income. I am also uncertain of the costs relating to its recent loss on its legal battle against Epic Games, I mean. So all these factors might play a part in squeezing its fourth quarter operating income, right? So you can see here that Epic Games has launched a lawsuit against Google, monopolizing the Play Store market by taxing its app developers 30% if they sell their games on the Google's platform. Epic Games have also tried to sue Apple Store on the same issue, but Epic has lost the lawsuit previously with Apple. So this win against Google is a huge victory for Epic Games, and how this win will affect Google's Play Store sales in the future and its total legal costs remains questionable. So now we look at the peer segmental analysis for Microsoft. Okay, so in this case, we compare Microsoft's recent results to Google, and we hope that you can get a better picture on both companies' relative performance. So even though both businesses use slightly different reporting standards and may operate in a different business environment, I think we can use this information to paint a snapshot of the tech industry's business environment this quarter. We can then deduce a valuation relative to both companies. So Microsoft's segmented revenue growth year on year seemed to grow faster than Google at 11% versus only 6% for Google. Microsoft Cloud's revenue seems to grow the fastest at 16% compared to all its other segments. However, we noted that overall quarter-on-quarter revenue growth for Microsoft seems to be on the same trend as Google and only grew slightly at 0.5% while Google was flat. So Microsoft operating margins, however, improved significantly from 43% during its last quarter earnings to currently at 47%, mainly contributed by its productivity and business processes segment, while Google only made 28% in its current quarter's operating margin. So Microsoft's productivity and business processes segments mainly consist of Microsoft Office, commercial subscriptions, Microsoft 365, LinkedIn Business Solutions, and Dynamics 365 Business Solutions, all of which employ the SaaS, software as a service type of business model, and have proven to be a highly profitable market for Microsoft due to its relevance and value add in its own market, while Google's reliance on advertising is slightly more cyclical in nature and thus lower margins compared to that of Microsoft. Markets have seemed to already attach a higher premium to Microsoft's share price, and based on its PE currently trading at 30 times its 2023 forward and 12 times its price to sales is already overdone, I believe, but this is because Microsoft's performance is really much better than the market itself. While Google, on the contrary, is currently trading at 27 times its 2023 forward, which to me is already pretty expensive to pay for muted performance in Google. Now imagine paying much higher for Microsoft, which in this case should be a no-no for me. Therefore, as a value investor, I prefer to pay a reasonable price for fairly good business rather than compete to buy a great business at a high price. It does not matter how the future will turn out for Microsoft. It may indeed outperform Google, but with a lower price paid for Google, I can be assured that my long-term returns will not lose out to my opportunity cost lost for not investing in Microsoft. Let us now look at Google's management outlook for this year. CEO Sundar Pichai maintains focus at commitment. CEO Sundar Pichai maintains focus and commitment in delivering superior products and services for Google customers, especially in the field of AI. Right? Efforts also include re-engineering its cost base and thereby creating improved capacity so that long-term results remain sustainable. We also noted the launch of Gemini recently, and this surprise launch have helped boost its current stock prices. Gemini is a multimodal language model that could analyze and respond to real-time information such as live video and human speech and is currently a breakthrough in the field of generative AI. Google also currently offers more than 100 models, including popular third-party and open-source models, as well as tools to quickly build search and conversation use cases. Google is also currently the only large cloud provider with a unified platform to analyze such structured and unstructured data. The value add in AI continues to be huge and could help Google's customers grow incrementally. This will in turn generate limitless opportunities for Google in terms of advertising and search. I have tracked Google sales from 2005 to 2022 up until the trailing 9 months 2023 to date. Google has shown resilience in its revenue growth and net profit margins since 2005. You can see here that net profit margins are mostly above the 20% range. Such businesses are a rare find, and if you can purchase such a business at a good price, you will definitely reap decent rewards if you hold on to the company for the long run. In fact, during both the global financial crisis in 2009 and the COVID crisis in 2020, Google managed to maintain its decent performance. This gives me the confidence that Google's business may be resilient in times of a crisis. The possibilities of scale is also set to be bright for Google as they venture into generative AI across all product offerings. Once AI has been optimized, I believe that Google can capture newer customers that aim to increase their own ROI in terms of commercial search and advertising dollars. With cost efficiencies in place, I believe that Google's future profits will continue to grow organically and at sustainable rates. Let's look at this quarter's cost for Google. There has been a slight increase in customer total acquisition costs for the quarter at 6% year-on-year and up 1% quarter-on-quarter. Total operating costs for the quarter was also up 6% year-on-year and up 5% quarter-on-quarter. As mentioned in my previous episode about the management's intention to drive down costs as of last quarter, I could see that due to the quarter-on-quarter improvements in terms of cost management, I think that management has done a good job, and I praise management for this job well done. Even though there will be higher costs booked into the final quarter, I hope that management's efficiency in team planning can further offset this cost, and let's just wait and see what happens. So for Google's net return on its assets after minusing all debt remained above 10% since 2005 up until 2022 and until to date 9 months 2023. However, the net ROA this quarter have declined to a current 14% from a 20% year-on-year. This is due to their increased larger asset base compared to last year, and these assets only generating about the same returns as compared to last year. However, the average industry gross ROA is around 10%, and Google is set to outperform the industry in its returns on assets thus far. So Google generated a free cash flow in third quarter 2023 of $78 billion, and this is a huge improvement from the previous quarter. The free cash is 14 times its current valuation. Free cash flow has improved compared to the same quarter last year, reflecting improved operating performance and deferral of tax payments to the fourth quarter. However, we must note that the $10.4 billion in tax deferrals have already been paid in October and should be reflected in the final quarter. Google's current forward PE is currently sitting at 27 times, its median PE is at 28 times, and the industry is at PE 39 times. And based on my PE forward evaluation metric, which I have revised upwards compared to my previous episode to reflect the higher forward earnings, Google share price to me should be around the $130 to $140 range. I have also revised my DCF for Google upwards to reflect the third quarter and fourth quarter improved earnings. Based on my discounted cash flow valuation, Google should be priced at 2.5 times its 2023 forward revenue. My current expected valuation of 2.5 times is still a far cry to its current price to revenue ratio at 5 times. And this to me indicates that Google's at current prices already reflect that most positives have already been priced in, unless there are further upsides surprises along the way. So in conclusion, after reviewing the full Q3 2023 business of Google, I'm confident that Google will be able to comfortably meet its 2023 business targets. But whether it will outperform remains to be seen. My 5-year vision for Google remains highly optimistic, especially in the field of generative AI, which has already been starting to reap early dividends as Google takes the lead in this area. Therefore, at the price I paid for Google, makes me feel it's all worthwhile for the investment so far, and I should hold on to it for the long run. But is Google a good buy now? I would say that the market is a bit too bullish on US big tech at this point of time, and this should not present any buying opportunity at this moment. Even though the Fed has recently, as you all know, announced that they're going to cut interest rates by next year, and this had pushed the market to newer heights for the S&P 500 as well as the Dow Jones. So I believe that growth in the company should not outside its share price growth. Therefore, this moment I will sit and wait patiently instead for the next buying opportunity until the next buying opportunity presents itself. So with all this, I will say goodbye to you guys and for the win. All right. Hope you guys make money in this market conditions wherever you are in, whether you are participating or not participating. I wish you all the best. All right. See you in my next episode. Goodbye.